So in terms of the 2025, we do have a downside risk. One coming from the domestic and the other is coming from the external factor. For the domestic part, which Sherry mentioned right before in a brief clip, we have some political turmoil that has not been a good news for the economy. But from the previous experience so far, we had two presidential impeachment before, and for both cases, the political turmoil or uncertainties have subsided within 3 to 6 months. So if that previous experience applies to this case, perhaps the political turmoil may not toll on the economy too long, or not too badly. But the downside, additional downside, which is a little bit troublesome for us, is an external environment. The new presidential-elect Donald J. Trump is mentioning multiple times about import tariffs, which puts a lot of pressure or perceived pressure for export-driven countries, including South Korea. So we have to weigh these two factors together. But certainly, it's not a good rosy news for us as a South Korean. But we have a pretty strong demonstration of the robust economy for the past 20 years. So I am cautiously optimistic about the economic conditions.
Let's go back to the political uncertainty. And obviously, we had this really sharp bout of market volatility on the back of that, and finding some calm here, but still really pressuring the Korean won at the moment. What kind of market measures does the BOK have up its sleeves in store for now that it can deploy when things actually hit to further volatility down the road?
So you mentioned a very important issue. So the Bank of Korea or any other Korean government agencies do not target any specific forex rate. But as you mentioned, what we do care about, what we are concerned about, is too much volatility. And from the December last year, obviously because of the unexpected huge political shock that happened in early December, shook the Korean currency quite a bit. And if you look at the evolution of Korean won last year, it moves along with other major currencies up until, say, November. But then it got depreciated a bit because we had a little bit of a surprise in downside, slower export rate showing in the third quarter. But mostly it's within the range of other major currencies, or if any, it wasn't depreciated too much. But again, the part you mentioned during this today's clip, the singled out or relatively weaker performances of Korean won happened since the political turmoil took place. But my personal view is that it's the market response is understandable considering the political turmoil domestically and also the uncertainties surrounding the new administration in the U.S. But I personally believe they will subdue it once the uncertainty has cleared out one way or the other. But in terms of the policy tools, again, having said that there is no particular target level of forex rate, we do care about the volatility. And if the volatility increases too fast, too much, then we do have a policy tools, including foreign reserves and coordination with government agencies, including Minister of Finance and so on. So we do have enough tools to handle that issue. But I do not like to give an impression that we will use it to target a certain level, which is not the case.